This is Business and Economic Review. Now, the disclosure of the intended sale of Britain's stake in housing finance has seen its share price at the Nairobi Securities Exchange jump up by 46% in 5 days of trading last week. Now, the share closed Thursday at 4 shillings and 99 cents a unit. It's essentially 5 shillings, which was a 1 shillings and 57 cents higher than the week's opening price over 3 shillings and 42 cents, which also saw the market valuation for the lender increase by 603.8 million in the space of a week to hit 1.92 billion. Now, the stock was the top gainer in the market every day last week, going up by a near maximum of 9.9% in each trading session. Central Bank of Kenya's latest data ranks HF second in the residential mortgage business, having lent 33.7 billion shillings to 4,717 house buyers as of December 2019, behind a market leader KCB, which has a mortgages worth 64.3 billion, which was lent to 8,404 customers. Britain put up more than 5 billion to acquire HF stake through several transactions, including the buyout of Equity Group's 24.7% ownership in the mortgage lender in 2014 for 2.8 billion. Just before we cross over to handle this morning, let's look at exactly what HF financial position is in terms of Q3 of 2020, and you can actually see exactly where they are in terms of their assets and liabilities as well, with also shareholder funds, which stand at 9 billion. HF selected key performance indicators as well as of Q3 of 2020, and what is going to really come into focus there is that profitability dip before tax and after tax, because that's where they are in the negative, and that's majorly due to the exposure of the real estate sector to the effects of the COVID-19 pandemic. All right, Arnold, where is the optimism in HF coming from after the announcement by Britain of their plan to sell their stake in HF?
Let me mention first it was bound to happen.
Yes.
If you look at HF, you first have to look at the entire mortgage, based on having access to mortgage facilities. If you do the numbers for KCB and housing finance, of course we haven't included the other market players, but if you look at the top two and you have less than 15,000 against a population of 40 million, looks like we're not doing very well in the mortgage industry.
Yes.
However, with HF, you have to go back to 2016 actually. HF were initially massively affected by the interest rate capping. A hit on the interest rate capping, it quickly begins eating up your interest income. So that was number one. And number two, I think slowdown generally of the housing market in the country also affected them negatively. And then I think also COVID-19 really now affected them massively. And in the past couple of years, HF have been trying to diversify their book. Moving from solely depending on the mortgage financing to pay and basically, and I think what they had done as the years proceeded. But from 2016 coming forward, that really didn't happen. The projections didn't happen, and markets changed quickly. And if you look at their position, they invested 5 billion Kenya shillings, and their current position in terms of that investment is to a tune of about 600 million. So it's a massive erosion of what they had invested, and it has actually hit their books. If you look at the financials for last year and last year but one, into a massive position and massive losses.
Yes.
Now, them mentioning that another bank will be taking over is a change of tune because of what is currently happening with the third wave of coronavirus. If you look at what had happened last year as late as October 2020, they had hinted that they were not in a hurry to sell. simply because there was a feeling that 2021 would signify a rebound in the economy with the mortgage market inclusive, so that to enter the recovery of that position, then probably slowly sold. Of course, it have mass affected the position as the investment is land. The other important thing to mention, as far as we have hired a Zimbabwean to come in place of Weregi. Weregi has been there for quite some time, 4 decades, if I'm not wrong, and that also meant a shift in the business strategy. You realize what they're doing, they're essentially trying to move more into their insurance business and essentially reduce their position as far as asset management is concerned. And that has also informed why they're willing to make that move of selling off that particular part of their business and essentially get what they can and reinvest in basically it's all set to happen. And if you look at the big banks in Kenya, you're probably talking about either equity reinvesting their position, which had been bought off by Britain, because these institutions are yet becoming. Third party will come in. Essentially, that has formed their position in the market. So most guys will be doing speculative buying of the stock. They know once you have an investor coming in, go up, and you can either sell or hold on to it to increase your position as far as the assets you're holding.
Yes. Now, Arnold, well, this sort of excitement about this particular stock at the NSA, is it basically the fact that, well, a bigger bank is the one that is going to buy into Britain's stake at HF, or is essentially, well, how do we understand that?
Okay, now I think the reason as to why there is an excitement, it's maybe threefold or twofold. Huh?
Yes.
Number one, the thinking is that when a bigger bank comes in, it will essentially increase the capital ratios required by HF to lend more. And the other item which is quite crucial in this discussion is that HF have been engaging with the government and other third parties into affordable housing.
Yes.
I think conventional mortgages have become quote unquote unaffordable, so it only makes sense for them now to engage in affordable to the mass. Now with this, the idea is that this might, in the long term, it will be a profitable entity. That's why it informs the essence of the stock price going up. Essentially,
pretty much. Arnold, I apologize. We have to take a tiny break because we're really struggling to get your audio in the studio this morning, and I would not like for us to continue this conversation before we actually get to settle it. Let's settle it and then see whether we can come back.